I know the perfect place for dividend investors to build a dividend portfolio. Dividend Watch. What's up, guys? It's your boy Ty, and I appreciate y'all taking the time out your day to stop by my channel. Make sure you hit that like button for me so we can keep this video in rotation. And if you're new to the channel, make sure you subscribe and hit that notification bell. I always have plenty to talk about, and you can be notified whenever I drop my latest video. Alright, so today is a little different. As you guys can see, I'm on my portfolio on Dividend Watch. So today we're going to be talking about dividends and how to create a portfolio on Dividend Watch. We're going to be creating a dividend portfolio so we can see how it is on Dividend Watch. Above is my portfolio, and you guys can see one of the main things that a dividend portfolio is supposed to be for is your annual yield. And when we look at my portfolio real quick, I give you a little glimpse. That annual yield is the percentage of dividends you get annually, So annual dividend income for me on this portfolio is $414. I'm going to earn $414 just by holding everything I own in this portfolio. So this is a pretty decent portfolio for dividends, but it's not as strong as it could be for dividends. And that's why I want to create a portfolio with you guys. And it's going to be mimicking my retirement portfolio. I don't have my retirement portfolio up here, but we're going to make something very similar to my portfolio, and we're going to create it on Dividend Watch. So if you don't know what Dividend Watch is an all-in-one tracker for dividend investors. So if you are into dividends, this is the perfect place for tracking your dividends. This site was created for tracking dividends, and it's going to be a link in the comment section and in the description for Dividend Watch. I use Dividend Watch, and you guys might want to check it out. So of course it says forget spreadsheets or complex data entry. Easily track over 3,500 stocks and ETF within your own dashboard. And it has different exchanges, a whole bunch of different exchanges up here. As you guys can see, NASDAQ, of course, is up there, and all the other TMX, a lot of different exchanges. The London Exchange, Euro Exchange. All right, and of course, it's a portfolio tracker, the most convenient way to track a portfolio of any size, estimate future income, calculate diversification, and stay on top of all updates. And they have a pretty good dividend calculator too. I'll get into that. I'll show you guys about that. And they even give you ideas. They let you know what the dividend aristocrats are, what the best blue chip stocks are. That's premium. You got to be in the premium membership to get access to the blue chip stocks, the high yield dividend stocks, and the high yield and high growth stocks. But the Dividend Aristocrats is free. Real estate investment trust, free. Dow 30, NASDAQ 100, and Dividend Zombies, they're all free. But for these premium membership, they are the best stocks when it comes to dividend stocks, cream of the crop. And of course, you can sign up with them and you'll get access to that. I'm signed up with them, so I got access to it. And again, it's a portfolio tracker specifically designed for dividend investors. What's up, Black and Blue? Look at that, you made the video. Calculate dividend income and other metrics. Estimate your monthly dividend income. Diversificate and keep track of your dividend portfolio. And I'm gonna show you guys what the price for Dividend Watch is. So select your membership. Dividend Watch is an independent financial tool that doesn't show ads or it doesn't sell your data. With one subscription, you get a portfolio tracker, advanced dividend calculator, and stock screener, all connected. That's the reason more than 5,000 investors are using this portfolio tracker. So Dividend Watch is relatively young, and that's why you don't see a lot of those ads and things like that. They're trying to make sure their site is clean. So a premium membership is $64 a year. I'm currently active. That's what I pay. But you guys can use my promo code. It's in the comments. TAF15 and get 15% off of this $64 a year. All right. Yeah, you get to get that because you rock with me. But they also have a free membership. So you can use the free membership and you can add up to 10 holdings, have one portfolio, and you're going to get basic calculator and screener. But when you add the premium membership, you're going to get unlimited holdings. You can have 9 portfolios. So we're about to see when I make a portfolio what that's like. But you can have up to 9 portfolios, unlimited stock screener and dividend calculators, access to premium stock lists, and 7-day free no commitment trial. So you can even try out the 7-day trial. But this 9 portfolios, I'm gonna show you what you can do with different portfolios, because you can add multiple portfolios. You can even have like a dummy portfolio or a portfolio that you want to test out and see what it do. If you want to just compare different portfolios, you can have yours, but you can also make dummy portfolios to practice or see what investing in certain companies would be like. So again, if you want to check out Dividend Watch, they have a free membership. So if you want to check out Dividend Watch, the free membership, check it out in the comment section on this video. But we're going to walk through it, and I'm going to do this because I want to show you guys what a good solid dividend portfolio would look like. And this isn't financial advice. I'm just showing you guys what I'm investing into, and we're going to go down some pretty decent stocks. So if you want to take a look at these stocks, make sure you do. But again, it isn't financial advice. If you need it, seek out it. So we're going to go ahead and hit create new portfolio. All right. So when we create new portfolio, I'm just going to put, again, this is mimicking my retirement. So I'm going to put retirement. All right. And I'm going to hit next. And I want it in US dollars. Yep. Type of portfolio. So you can make it a portfolio or you can make it a watch list. And now I'm going to hit create new. All right. So once we get there, you see I have 0 yield, 0 cost, and it says add your first transaction. So I'm going to be adding some stocks to this portfolio as we go along. So first off, I'm going to be adding a Dividend ETF that I think is pretty dope. And that ETF is one that I hold in my retirement portfolio, and that is Noble. So I'm going to put Noble. You see it, ProShares Trust, S&P 500, Dividend Aristocrat ETF. So this ETF solely invests in Dividend Aristocrats. It's an ETF that's just invested into aristocrats. If it's not an aristocrat, it's not in this ETF. All right, so I'm going to hit buy. And of course, if you were making it for your portfolio, you would put the actual date that you actually bought it. But for the sake of this video, I'm just going to put today's dates. And I'm going to put, I got about 25. So I'm going to put 25. I'm going to put 25. Add transaction to portfolio. And simple and plain. You see now is in there. It tells me my annual dividend income. It tells me my dividend yield and my portfolio value. All right, and then when you come down, you even see the monthly estimate. So this ETF doesn't pay monthly, it pays quarterly. So that's what you see, the quarterly income, which is dope. Again, you can track how much you actually will be making. And this is a good tool for those that are in retirement and you want to estimate how much you are going to be receiving from dividends. All right, so I put Noble in there. And the reason I like Noble, again, it's an ETF. So let's look at Noble real quick. So Noble, ProShares Trust, ProShares S&P 500 Dividend Aristocrat ETF. It has a dividend yield, as you guys saw it. It's the only stock that was in that portfolio of 1.98, and it gives an annual dividend of $1.86. And as you guys can see, of course, it's been increasing its dividend over time because it's invested into Dividend Aristocrats. So it's a pretty safe ETF. It's a pretty safe ETF because it's an ETF that's only invested into Dividend Aristocrats. So of course it's going to keep increasing its dividend payment. Again, this is one of the ETFs that I hold in my retirement because of this. This is a pretty steady and safe ETF. Now, when you're talking about retirement and things like that, me personally, I like to be a little more on the safer side than what you are seeing with the cryptocurrency or with my hyper growth strategy that I'm doing in my personal portfolio. I told you guys I was going to dial back just a little bit on dividend investing in that portfolio, but I'm still investing in dividends in my retirement portfolio. And, I still have dividends steadily racking up and having that snowball effect. But I just wanted to put that on your radar because when you do choose stuff for your retirement, you kind of want to be a little more on the safer side. At least I do. That's what I'm doing with my retirement. Oh, and I also do want to add places, ETFs like Noble, for people that are retired and they want to have all of their money in one place. ETFs like Noble will give you that guaranteed payment regardless because it's only invested into Dividend Aristocrats. But one thing that is on the negative side about ETFs, I've been saying is you guys see the dividend yield on this is 1.98. Make sure you remember that. So an ETF, 1.98 is a steady grower and is a pretty solid ETF. Just remember that yield and you guys gonna see what I'm talking about. All right, we back on the retirement portfolio, and the next thing that I want to do is go up here to actions, and I'm gonna add a new transaction. The next company I want to add is, of course, Coca-Cola, and it is a Dividend Aristocrat, but I also got that in my retirement portfolio. I have we're gonna set today's date, we're gonna hit a buy, and we're gonna put 9. And like I said, this is just mimicking my retirement portfolio a little. It isn't quite what I have in there. I got a lot more things in there, but we're just mainly gonna talk about these dividend companies. And you guys should know about Coca-Cola. And as you guys can see, the yield went up a little bit. And we're going to see why when we go to Coca-Cola. Coca-Cola is a solid company. It is a beverage company, manufactures, markets, and sells various non-alcoholic beverages worldwide. So everybody know who Coca-Cola is, and it's a Dividend Aristocrat, is a dividend zombie. It's been around for a long time. So you see the yield on this is 2.78, It gives an annual dividend of $1.68 annually. So that dividend ETF, it might be a safer place to be, and it might even have a little more growth than the actual dividend aristocrats or the companies within it. But if you own the actual company, you will get all of that yield, because a dividend ETF, it is an ETF. Somebody has to get paid for putting that ETF together and holding those funds together. If you dial into the companies themselves, you get a lot more for your money. But you just got to know which companies to get into. So you guys saw I started with Noble. If you're a new investor, I still say you might want to dial into an ETF to get your holdings and get a solid ground beneath you. But if you actually know which companies to go into and you feel safe with them, it's best to have the actual companies. So when I first started my retirement portfolio, I went heavy on Noble, and that's why it's at a 25, and I haven't bought any more for a while, because I've been dialing in on the actual stocks that will give me the best return and best dividends, because I know now. But if you are new, an ETF, there is nothing wrong with owning an ETF. Just when you know, you know. All right, so we go down to Coke. Coke is very faithful. As you guys can see, it has been increasing its dividend. It is a aristocrat and zombie. That's what they do. They increase their dividends, and they are safe havens for their investors. All right, let's go to the next one. All right, so we're getting an annual return of $62 so far. Y'all feeling good? The portfolio value is $2,893. You feel good about it yet? All right, let's add the next company. And we're gonna go add transactions. This time we're gonna go with Cisco. All right, Cisco is a great company, and they are also, I feel like they go hand in hand with Coca-Cola. We're gonna say today's purchase date, because they deliver food. They deliver a lot of things. They deliver food mainly to restaurants, to grocery stores. So, they're in that same sector as Coca-Cola. And let's put, I got 5. We're gonna put 5. Add transaction. And you guys can see the yield is still looking decent. And let's take a look at Cisco. So Cisco, through its subsidiaries, engages in marketing and distribution of various food and related products, primarily to the food service or food away from home industry in the United States, Canada, the United Kingdom, France, and internationally. You guys can see Cisco has a nice dividend yield of 2.34, gives an annual dividend of $1.86, and it's been steadily increasing its dividends. All right, so Coke and Cisco are pretty solid companies. They're both dividend aristocrats, and they've been doing their thing for a while. Now let's go to the next one. All right, now we're at $71 annually, $3,290. You guys see what it is with this dividend income. When you want income, you're gonna have to put money in. All right, I have a bunch of REITs at the end of this video, and I'm gonna show you guys those, but those are the best place to have that high yield. But this next stock is definitely a high yield stock too. It's not a REIT, but it's one that I'm banking on pretty heavily, and that's TSLX. 6th Street Specialty Lending. And today I got about 36 shares of those of them. All right. Add transaction. Oh, you see how the yield jumped up? We in the threes now. Now let's take a look at that. All right, 6th Street Specialty Lending. 6th Street is a business development company. The fund provides senior secured loans, unsecured loans, investments in corporate bonds and equities, and secured products. All right, as you guys can see, it has a dividend yield of 6.87. That's the highest yield we've seen so far. It gives an annual dividend of $1.64. And when we go down, it has been increasing its dividend faithfully too. I'm heavily invested into 6th Street. I think 6th Street is one that could go the distance for dividend investing. I have 6th Street in my dividend portfolio and my retirement portfolio. But yeah, check 6th Street out. And you guys see that high yield made the whole portfolio jump up a little bit. And you can solely invest into high yield dividend companies, but the ones that have very high yield, a lot of times they're a little more risky. Like 6th Street isn't a dividend aristocrat, but is hitting the scenes, and it hitting the scenes hard. And I think it has great growth and has been giving good dividends. And that's another thing, it's gonna be a while till I retire, right? Hopefully, maybe it might not be. I don't know. Maybe I might get to, hit the fast track with it. But I'm still pretty young, so I don't need those companies that are super, super, super safe to be the bulk of my portfolio, because my portfolio still has time to grow. So companies like 6th Street, I feel, that have growth and give a nice high yield, man, that's like finding gold. But again, those high yield dividend stocks are a lot of times kind of risky, but I'm good with it. All right, let's go to the next one. Matter of fact, the next 1, 2, 3, 4. I got 4 more. They're all REITs. So we gotta start with the OG. And we're gonna add O. We gotta start with the OG. It wouldn't be a retirement portfolio if I didn't have O in it. All right, and let's set today. And I have about 30 O. Add transaction. You see that dividend yield still jumping up. So I added O Realty. And let's go check out O. I know y'all already know about O, but it don't hurt to, check on it again. So O, Realty Income Corporation. So this is one of the best dividend stocks to be in for dividend income. It's a monthly paying dividend stock. And a lot of people use this in their retirement to get a consistent, steady dividend back from their, stocks. Realty Income, the monthly dividend company, is an S&P 500 company dedicated to providing stockholders with dependable monthly income. The company is secured as a REIT, and its monthly dividends are supported by cash flows from over 6,500 real estate properties owned under long-term lease agreements with our commercial clients. All right, so you guys see the dividend yield is not as high as 6th Street, but it's 4.13. and it's an annual dividend of $2.86. But you getting this monthly. And as you guys can see, it's been increasing its dividend payout forever, for real. It's a dividend aristocrat for a long time. All right, and that's the thing that you want to see. And I'm not looking too much at the net income and all that in these videos. It's mainly about dividends. When you're talking about dividend investing, the main thing that you need to worry about or want to be worried about is how much you're getting paid in dividends, and is that payment going to be consistent? So far, I've showed you every company has been increasing their dividend and paying consistent dividends to the shareholders. And Realty Income is definitely one of the greats when it comes to dividend income. So now we added O, and you guys can still see I got $6,000, $226, and I now earn an annual dividend income of $216. Okay, let's add the next stop. And these next ones, they are high yield. All of these last three REITs are high yield. We got Omega Healthcare. I'm pretty sure you guys have heard about Omega Healthcare. If you haven't, I'm about to put you on game, because Omega Healthcare is an awesome REIT and I like what it does. All right, we're gonna add transaction. All right, and now you guys see it's still jumping up because of these high REITs. So now our dividend yield is 4.27. All right, let's go check out Omega Healthcare. All right, you guys see Omega Healthcare dividend yield is 8.62. It's the highest so far, right? Yeah, it is. All right, so what I like about Omega Healthcare is a REIT, but it's special. Omega is a real estate investment trust that invests in long-term healthcare industry, primarily in skilled nursing and assisted living facilities. All right. Its portfolio of assets is operated by a diverse group of healthcare companies. All right, so that is the key to Omega Healthcare. Is in the healthcare field and is a REIT. Man, you're talking about safe. That's a safe place for you to be. All right, and it gives an annual dividend of $2.68. And you guys can see it's been giving consistent dividends. It doesn't look like it increased its dividend in 2021, but it didn't drop. It kept it the same. So that's a good sign too. It didn't drop, it kept it the same. And Omega Healthcare, like I said, it's one to check out too. And that dividend yield is crazy. It's definitely a great dividend yield. So now we have $7,376, and you're gonna get an annual dividend of $315. You guys see how much it takes to put into a portfolio to actually earn very solid dividends to live off of. But we're gonna keep going down because I want to show you guys these other companies. Let's go ahead and add the next one. Oh man, the next one is one of my favorites. I got this stock in like every account I got this REIT in every account because I really think is one that's pretty special, and it is EPRT. Let me hit the charger real quick. Y'all saw that? I'm juiced up now. I'm getting that juice now. I'm out here putting up content late, man. I gotta get my phone charged. Anyway, EPRT is Essential Properties Realty Trust and is really a great REIT. As I said, I got this REIT in my portfolio, a joint portfolio, a retirement portfolio, my kids' portfolio. Man, I'm really banking hard on this one. because it looks good. It's a REIT, but it's hit the scenes in like 2019, and it's been doing extremely well even through COVID and pandemic time. So yeah, I like how that look. All right, we're gonna put 43, and we're gonna hit EPRT, add transaction, and see that dividend yield is just getting higher and higher, right? Let's check it out. So Essential Properties Realty Trust, a real estate investment Essential Properties Realty Trust, a real estate company, acquires, owns, and manages single-tenant properties in the United States. All right, so it's a pretty good company. They got medical centers, automotive services, convenience stores, equipment rental, these type of places, child education, daycare spots. Those are the type of properties that are in its holdings. It has a dividend yield of 3.77. It gives $1 annually, and you guys can see it's been increasing its dividend. It's been increasing, and that's why it has great growth. It's in there around $26.55, and it has great growth. If you check this one out, like I said, this is one that I'm banking on. I talked a lot about this one, but I really got faith in EPRT. And the last REIT that I want to put on your radar. Hopefully you find this beneficial. Like I said, you can check out a lot of these companies. It is Ares Commercial Real Estate, and I have 74. Set the date to the day. And that's almost $10,000. Almost $10,000. And I get an annual dividend income of $460. And that's a pretty decent dividend yield. Yield of 4.79. And let's look at Ares Commercial Real Estate Corporation, a specialty finance company, originates and invests in commercial real estate. All right, it has a killer dividend yield of 9.49. It gives an annual dividend of $1.38. And it has increased its dividend. It has kept it the same for 2 years, but it increased its dividend in 2021. And Ares is a great spot to look at. This one is good to look at whenever. And what mainly attracts me to the dividend company is if they are holding tight on their dividend price or increasing, and Ares is doing that. A lot of REITs fell by the wayside when COVID happened, and this one did not. None of the companies on this list fell by the wayside. So that's pretty good when you're looking at companies or looking for good, solid, safe companies. Again, like I said, you can check out any of these companies. These are companies that I actually hold in my retirement portfolio. I have about what this is, but I have a lot more, But I just wanted to show you guys what it looks like when you have a certain amount of money, like $9,594 in a dividend portfolio that's solely for dividends, and you get a decent dividend yield of something like 4.79. And yeah, so one of the perks that's on Dividend Watch, So of course you got the pie charts. Everybody got a pie chart. You love that, right? And it tell me how I'm diverse. They say I got a little bit in ETF, consumer non-durables, financial services, consumer services, and like I said, ETF. All right. But one of the biggest perks on Dividend Watch, you even got calendar when you see when you're gonna get your dividends. Of course, they track what transactions you made, and of course, it tell you what your upcoming dividends are. One of the best perks is the actual calculator. So I hit copy to calculator. It moved everything in this portfolio to a calculator, and I can hit price growth. Do I want to add the price of the growth? We're gonna put average for the whole entire portfolio, and we're gonna put that we're reinvesting dividends, adding that drip. And am I gonna add something every month? I'm just gonna have no, because this is just for show. And then I'm gonna hit calculate. It tells me what my dividend income would be for the next 3 years. It tells me what my portfolio should be, and it tells me what my dividend income will be. You guys see? Portfolio should be, because I added that 10%. Portfolio should be going up, and my dividend income should be going up. So that's one of the perks on Dividend Watch. One of the best perks that I've seen when it comes to calculating your dividend income and projection on where your portfolio will be, without all the legwork of spreadsheets and things like that. So definitely check Dividend Watch out. There's a reason that I'm using it and I pay for it, because it's pretty dope. So that's how you use Dividend Watch. I hope this video was helpful, and I hope you consider, going through, checking out some of these dividend stocks, or even, getting Dividend Watch and creating your own portfolio, even if it's just for show, So I appreciate y'all checking me out. I know this was a little different from the crypto run-throughs that I do, but I do want to put dividend investing on people's radar too. I know it's not as exciting as the crypto market, but dividend investing is a great way to earn passive income and build generational wealth. So I definitely wanted you guys to understand how to get a piece of that pie too. All right. I appreciate you sticking with me. Thanks for checking me out. Peace.